Hey, good morning. It is Wednesday, EIA Day, 5:59 a.m. Chicago time, and take a look at NASDAQ. NASDAQ has hit the top, and as what happens when a price presses up to a prior top, we are immediately pulling back off that top. And what I would like to see is a rejection of this area, a return to the previous value area to confirm my flush down. I think it's it's like so tempting for me to throw a one lot up here, but I'm thinking in the day session when the market opens, in the RTH session, we don't really have a pit open, but we have a regular open, that they're going to probably retest this high, so it would be futile. I mean, that's a decision you have to make as a trader. Do you risk, getting run over by value testing and pushing past that high, or do you take it? And thank God I don't have to worry my little head about those questions anymore, because I've determined not to be a top and bottom trader anymore. I'm simply going to wait for price action to turn around and enter a value area and in the direction that I want to trade. And if I'm trading short, then I want those trades to be moving short, so I don't have to worry about that. So for right now, the NQ is moving long. I've got my 4 tiers showing me that we might well break that high and expand beyond it. That's what my indicators are telling me, that this is a very high probability range expansion. And here we are at VWAP. So my trade is to go with the trend, either at the VWAP or at the lower standard deviation. So when this candle forms, I should put a trade on going higher. So I'll keep a close eye on that. And let's look at the E-mini. We have the same thing, but we have a little bit of headroom here on the E-mini before we reach our top. So that's why I think the NQ will break through its high, because once it follows lockstep with the E-mini to push up to this high, it's going to break through that range. And here's my lower time frame for the E-mini. Here's a standard chart that I use my deviation bands from the VWAP, and I have my market profile. I call it my follow the yellow brick road, the 25% value, and the red band is the 70% value. Here is the chart, and I've got my 4 tiers again for the direction guide strategy. And this is how my direction guide strategy looks. And here is the 30-minute slope. And as you see, like the NQ, we've come off the top. So we're just going to rearm ourselves for that breakout attempt at the open. So we'll keep an eye on a potential range expansion today in the E-mini and the NQ. And let me look at the 6E. We are inside the previous day's thrust. and the stochastics are moving up. And if the range expansions occur on the E-mini and the NASDAQ, will continue moving up. Now, what will put the Casbah on this? And here's a picture of the direction guide. Currently, we're in a downtrend on the 6E. So I don't know if that upthrust is going to work. This may well be rolling over and going back in the direction of the trend. And as you see, we have the weekly, daily 60-15. So it's a good time to wait for a pullback and then do a trend continuation on the 6E. We had our initial thrust down, and so now we need to wait for a couple of bars to pull back, and then we'll enter in a trend continuation back to the downside. Hopefully that'll continue moving instead of chopping like we had the other day. And here's a picture of the deviation bands, and you see how they react very nicely. This is like a beautiful instrument on the VWAP and market profile. Very, very nice. So now let's look at the crude, and here's what can put the Casbah on the E-mini and NASDAQ, and that is, here we are at 4609 or 4109, 4109, holding below our value area of our last swing high low. Here's the value. Yes, it's a Fibonacci, but I use 30, 50, 70. I use the value area numbers. And so you see the market is respecting that, holding below value. And we're going to push down towards this previous swing low at 39.50 something, 50, 60. And when we get the EIA report, that very well, this lower trend line will likely get taken out. But whether that holds or swings up depends on the number, which will be a temporary fix. I mean, a temporary hold, because we all know that we have all that inventory sitting around on the tankers in Iran and all that crap. So, but we do have this nice divergence, as you see, which could indicate an upside surprise and a short squeeze. I showed you how all the managers, or the hedge fund managers, are short in crude. So I don't know who could pull off a short squeeze. I guess it would be the oil companies, getting all their traders just buying today, no matter what happens on that number. So we'll have to see how this plays out. So be very careful today ahead of OPEC. That's what is so worrying about trading today, crude, because OPEC's coming out Friday with their bearish surprise. So here is the 30-minute chart. Let me get the VWAP out of here so we can see this better. I don't really need VWAP on my 30-minute slope chart. That's better. And you can see that we are definitely in a downtrend. And here is our open, 41.24 for the 24-hour session. And here is our prior low at 41.17. So price should definitely make it down here. At the RTH open, it might pop up into here to bounce up and down, but just be careful today and keep your powder dry Here's the previous point of control when it opens will be 41.65, which is in the middle of our 25% value. So that's a very high probability target. 41.65, in my opinion, that price will probably come back up and tap. Now, whether it continues to fill in this air pocket or not before Friday, my guess is there's going to be a lot of oil company interest in keeping prices up ahead of OPEC today. So be very careful trading that EIA report today. It's just going to be very tricky. Trading crude is tricky anyway. And here is the beautiful picture of this downtrend, though. So we'll have to see if this turns around. We have our divergence and pushes back up to my point of control, or resumes its merry way on breaking that lower trend line. So we have a lot of opportunity today. We have the upside potential breakout for range expansion in the E-mini and in the NASDAQ. And we have a potential downside resumption of trend in the Euro. Now, what's so interesting is there's a lot of room to move, and that'll move fast. If that breaks up here, it should move fast. So I'm not sure if you'll get a last kiss coming for it to come back and retest that upper trend line before it takes off or not. So that makes the decision on whether to wait for the pullback or take the breakout very interesting. If it does manage to come back down to this lower deviation band, that would be an excellent location to enter a trade, and then your stop would be below this other deviation band, although I don't like the fact that the value is way down here, the previous value. You could get your stop run if you do that, so you might just want to tuck a very tight stop. That's what makes trading so difficult. We'll just have to see. We're out of momentum clearly right now. There's no reason to put a trade on at this moment. There's nothing here to trade. We just have to wait. We have to be like fishermen and sit in our chairs, pretend they're boats, and just wait. We have to wait for the fish to start biting. Let me put this on the Euro. And we have some momentum down to the downside, so we're going to wait for our pullback, probably to the previous open, previous value, initial balance low. It's a big 1 hour range that it respected. And then a short position somewhere in here would be fantastic. So those are my trade plans to the day. Downside Euro, downside crude, and I'm waiting for the NQ and the ES to turn around. Y'all have a great and prosperous trading day, and let's get ready for Friday. Yay! Talk to you soon.